Welcome back. Today, I'm going to talk about the 2025 housing forecast by HousingWIRE and pair their housing forecast with other expert websites. So to learn about what they are, what kind of crystal ball they have, right? Well, I know nobody have a crystal ball. Anyway, so our headline is how HousingWIRE's 2025 housing market forecast compares to others, okay? Other very credible sources as well. So Logan Motoshami and Mike Simonson, they are part of the HousingWire Autos research team. They have projected 4.2 million home sales and home price appreciation of 3.5% in 2025. Please comment below what are your thoughts about this data I'm sharing with you. And also let me know, where are you? Every market is different, right? Every market is local in the US. So share with us, where are you from and how is your particular local market? Do you agree or not agree with this housing market projection by various sources? With that in mind, please like and subscribe to my YouTube channel and log into my website so you can become a free member of our real estate community. We receive free real estate information every morning coming into your email inbox about real estate investment opportunities, housing markets, housing economy, the whole 9 yards. All right. All free of charge. So thank you for watching. All right. So HousingWire and Auto Research, they say that's what they are. They're projecting 4.2 million in existing home sales in 2025. That is a 5% increase over 2024, which is on pace for 4 million transactions, a number that would represent the fewest home sales since the housing bubble burst in 2008. In other words, this past year, 2024 and even 2023, there is a housing sales crash, not a housing price crash, but housing sales crash, a crash of historical proportion. Let's look at the active inventory in projection 2025 was single family inventory, how it'll finish at the year 2025, up another 13% over 2024. As you can see, back in 2022, 2023, there are very low active inventory, which is down at this level. Okay. So the next few years, so gradual increase of housing inventory. So there's a good sign, right? There's a good sign that potentially we're moving into a healthy housing market where supply equals demand. That's what we want, a balanced, healthy market. But for so long, we have such a low inventory and such high demand, and that's therefore prices has risen year over year for so long these days. All right. So, all right. So what else? So for comparison purposes, annual home sales over the last 2 decades have averaged 5.15 million, and sales topped out at 7 million in 2005. If you recall 2005, that's the housing crash scenario where there's so much supply than demand. The housing crash occurred in 2008, but 7 million homes for sale, that's really excessive. That's why there was a housing crisis during that time. But now, past 3 years, we have less than 4 million total homes for sale. So very low inventory. Here's an important projection that HousingWire and Autos Research mentioned. That's their HousingWire projection is based on mortgage rates will stay in the range between 5.75 and 7.25%, which is very realistic. I like this range. In addition to ongoing affordability issues and low inventory, HousingWire analysts foresee home price appreciation of 3.5%, less than the 5% growth seen in typical years. This forecast is higher than the average for the industry. All right. So 5% growth is a historical average of home price appreciation. HousingWire 3.5%, but only time will tell who is going to be right. This is a very good comparison chart right here, 2025 home price appreciation forecast of all the major players out there. Okay, why I talk about that? Many other YouTubers talk about these organizations, about their housing economics data that comes out on a consistent basis, all very credible sources. And their projection, Goldman Sachs project 2025 home price appreciation to be 4.4, Wells Fargo at 4.3, HousingWIRE, of course, 3.5, Economics Survey, 3.2, Fannie Mae at 3%, Mortgage Stanley at 3%, Mortgage Bankers Association at 2.9%. Average of all the third forecasts by these organizations around 2.6%. Ivy Zelman and Associates, her predictions a little bit lower, 2.3. CoreLogic, similar at 2.3. And then Zillow at 2.3 and National Association Realtor at 1.9. Freddie Mac at not even 1%. Freddie Mac at 0.6%. And Moody's Analytics at 0.3%. Basically, no appreciation growth in 2025. There are three organizations, NAR, Freddie Mac, and Moody's Analytics, projecting less than 2% appreciation growth. Nationwide, every local market is different. Okay, you need to understand that. It's just a projection. Nobody have a crystal ball, but hey, look, might as well have fun and just to see what these credible resources, what are they predicting? What kind of data? How they came up with this data? We talk about research methodologies associated with these companies, but they are pretty legitimate over the years. We take it with a grain of salt, but it's nice to know what the so-called experts think. And a shortage of homes for sale has been a prime impediment to the 2024 housing market, right? HousingWIRE expect 13% growth in inventory with a peak of October of 800,000 before finishing the year at 720,000. So, yep, that's how it is. HousingWIRE 2025 forecast of 3-point home price growth is at the higher end among 13 sources, which I just mentioned, which averaged 2.6% growth. And NAR, Chief Economist Lawrence Young, projects a 2% rise in home price in both 2025 and 2026. Fannie Mae expects a home price index to rise by 3%. So the range for projection for home sales is a little tighter than for home prices. HousingWIRE expectation of 4.2 million existing home sales is in line with Goldman Sachs 4.2 and MBA 4.3, and NAR is at the top of the range of other forecasts with a projected of 4.9 million sales. As you can see, the chart pretty much validates what we say. So with that said, so this is a quick snapshot of what those experts think about the 2025 housing forecast. Or some of you guys are saying, oh, they're always wrong. These organizations been doing forecasts year over year for the past who knows how many years, and they're all wrong. And it's nice to see what they're thinking, these experts. No one knows what's going on with the economy. Right now, the economy is doing well. The labor market, the employment market is doing very, very well. That means the mortgage rate are staying elevated, right? And which is very frustrating when you have the Federal Reserve reducing their rates by 50 basis points a couple of months ago, and yet the mortgage rate increased. What the general public thinks, if the Federal Reserve lower the rates, then mortgage rates automatically go down. No, that's not how it goes. As we painfully learn, the mortgage rates are more aligned with the 10-year Treasury, okay, the 10-year yield. But we'll talk more about that in the future. My personal forecast, we can end the year at the mid 6% mortgage rate. Now, remaining beginning of next year, maybe we have a gradual decrease of the mortgage rate if the economy stays strong, if the labor market is very strong, and the unemployment numbers are still stays very low, and the mortgage rate going to stay elevated. That's a frustration. Yeah, personally, for 2025 mortgage rate, I might as well throw in my projection. The mortgage rate is going to be either at low 6%. That is my projection. I don't expect to see mortgage rate going to go below 5.75% for 2025. So what to deal with it if you're staying on the sidelines, hoping for 5.5% mortgage rate for 2025, or I think you better be more realistic. That will not happen. So make your decisions accordingly, waiting for mortgage rate to come down drastically before you make a decision. All right. So that's all I have to say. Thank you so much. I hope you enjoyed this short presentation. If you see any value, please like and subscribe to my YouTube channel. And better yet, comment below. What do you think about this kind of projections and what's going on with your local market? Also, subscribe to my website, to my newsletter below. Just put your email there and you'll be part of our real estate investment network, where you will receive free information about real estate investing, housing markets, the whole 9 yards. Thank you so much for watching, and I will see you on the next video. Bye-bye.